Hey there traders, welcome back for episode 99 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And every Sunday here, what we do is walk through the major averages, take a look at the indices, and we know that that's going to influence most individual stocks. So by taking a look at the big picture, it helps us really refine our trading plan for the week ahead and eyeball some key levels to keep a close watch on in the days ahead. So we're going to walk through the NASDAQ, S&P, and Dow. I'm going to point out some key levels here that I'm watching, and hopefully you can add it to your trading plan and benefit from it. So up first is the NASDAQ, and across the board, we have seen the market make a pretty good move here over the past several sessions. Now, we've been up 5 of the past 6 sessions, and the 6th one, of course, was on Friday of last week. It also was a very minor loss. The NASDAQ gave up 3 points, S&P gave up a point and change, and so it was a very minor loss. It essentially was a day of rest that finished, barely negative. So no major ground was lost. What we've done here is we have really confirmed higher lows here in the near term. So that's a good thing. By clearing the highs between those two lows, which we did at the end of last week, we confirmed another higher short-term low. And that's very good. It does imply that the trend is still very much up, but a couple of things here I want to point out. Number one, we're very stretched here in the near term. We've essentially moved straight up for several days here, and it's time to put in a little bit of rest and try to digest that move in some fashion. Whether that means we move sideways or pull back a little bit, either one would actually be a healthy event for this market. Number two, this upper trend line here of this channel that the NASDAQ is in, we've now reached that, and we're really stalling out right at the upper end of that. So it really helps to validate this upper trend line here and just confirms that we're running into some overhead resistance here. Obviously, we cleared a previous key level, so on a level by level basis, we're through resistance. But when you take a look at the context of this move, we're essentially in this big rising rectangle pattern here, or we're in a kind of a tilted channel or an ascending channel here. And so as we reach the upper end of that channel here, it's natural to see prices begin to kind of stall a little bit, and we really haven't seen any profit taking yet, but it looks like the buyers are probably taking a little bit of a breather here, and that's a good thing. So if they actually did do that for a few more days in the days ahead, it would actually be very good. Now, for the NASDAQ, I'm really watching a couple of key levels here. I'm watching this low that we just set down here at 1958, and as I zoom out here further on the chart, the next level I'm really watching is right up here at the 2150 area. That was major support throughout 2008. Once we broke it to the downside, it really paved the way for a lot of selling to kick in. So as we edge closer and closer to 2150, that former support zone could then become resistance. So I want to be definitely aware of that if we do see continued strength in the weeks ahead. For the S&P 500, here again, we broke out by clearing the previous highs, and that, of course, confirmed a short-term higher low on the chart here. So that's very good. We are seeing volume improving a little bit post-Labor Day. I think that will continue. But in the near term, we've moved considerable distance here in a very short amount of time, and it's going to be very healthy to see some kind of rest in the days ahead. So for the S&P 500, I'm watching this level right here, 991. That was a short-term level that we just pulled back to and bounced from. So that's very important on the way down. On the way up, I'm going to zoom out here once again. I'm going to point to this 1100 area where we broke down last fall. We had seen the market really decline to that level and pause a little bit, and then once it broke down through it, the downside was substantial. So on the way back up, that 1100 area should also pose as an important zone. For the Dow, here again, we've got our short-term higher low. We barely cleared this previous high, but we did so. And so last week we did see the Dow also follow suit and make a new recovery high. However, this 9600 to 9650 area 9630, kind of right in the middle there. That is a zone that this index is struggling to really clear and leave behind and put it in the rearview mirror. So for now, that's what we're contending with. Right down here, this level is the 9250 zone. So if we do pull back, I would expect to see a possible test of that. And on the way back up, here again, I'm going to point to this same time frame here. This index paused at around the 10,400 area. Once it broke down through that last fall, obviously the floor was clearly broken through. So if we do continue climbing, this 10,400 is really the next major level that I would expect to see this index hit. For now, it's acting a little bit stretched in the short term. So to see some sideways price action here, or maybe even a minor pullback, would be a very welcome sight for bulls and bears alike in the days ahead. Not to say it's going to happen, but it's looking a little bit more likely after a significant run in the past several sessions. All right. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.